Hey guys, welcome back to the channel. Today is September the 29th. It's Thursday morning, and this is pre-session before the market opens up. And I'm doing a video covering today how to identify or locate a high probability supply and demand levels, pretty much. Okay, so we're going to kind of classify what's low probability, what's high probability. I'm getting a lot of questions surrounding that. I think a lot of people are still kind of iffy and really not 100% sure about what I consider to be high probability or low probability when I'm taking my trade entries or marking off zones. So we'll talk about that. But you know, I always tell you guys that you have to understand, and you must be able to understand market structure and read price action to be able to find and locate these zones. All right, because it's all centered around those two key core concepts. You know, looking at market structure, being able to understand what the market is doing when it's making levels and pulling back, breaking levels, and then making new levels. So you have to be able to understand market structure, be able to read it. It's like reading a map, and as well as following the price action, the price movement as the market is making its ebbs and flows. So, you know, and normally what happens is that as prices, you know, making higher highs and higher lows, turns around, starts breaking structure to the downside, making lower lows and lower highs. So it's breaking structure. That's price action making momentum, you know, moves to the downside. Okay, and then at some point, it might hit a significant area of support, an area of demand, or whatever the case is, turn around, pivot, and push back higher. So you have to be able to look at, you know, the thrust, the momentum in the market, the push that price is actually making, and being able to understand if it's breaking structure, if it's failing in a certain area, and then just, you know, moving it back in a certain direction. So you have to be able to read and understand just visually with your eyes. Look at the charts to be able to understand market structure. You know, be able to read that roadmap, be able to read that. To me, it's like looking at a blueprint. You're able to kind of see the painting, the drawing on the board, and being able to read that. It's, you know, it takes time. It doesn't just happen overnight. And you know, for me, it took a little time, and that's why I'm trying to, like I said, trying to curve out that path for those that have been following the videos here. Hopefully it kind of expedites your process in which you're able to, you know, start becoming a successful trader. So let's go ahead. I don't want to kind of rant and talk too long about going into detail about certain things, but let's go ahead because I want to show you a couple of examples of what's considered high probability and low probability, okay, zones. All right, so first off, we'll take a look at, okay, I marked off this area here. I talked about this area in maybe in yesterday's video, but or maybe the day before, but all right, so let's just take a look and see how this unfolds. All right, so you see price making higher highs and higher lows, right? And I'm gonna draw this out for you so you guys can understand this. Okay, this is normal price action. Price making higher highs and higher lows as it's making moves to the upside. You know, it pulls down here, breaks a little higher right here, breaking through this area here. Then we have a deep retracement. Then price breaks higher. It pulls back, say right here. Okay. Then it breaks higher, makes a higher high. So all it's doing is making higher highs, higher lows, deep retracement, higher high, pull back, okay, and then breaking higher. Now, you have to be able to understand as prices are making higher highs and higher lows, you know, what is it trying to accomplish? Okay, so it made a high right here. Now, when I talk about breaking structure, you know, I'm going to show you this now. Because when price made this high right here, what happened on the way back down? It broke structure right here. It broke support, right? So once it breaks support, okay, then it's like, okay, what is price trying to do now? All right, it's broke structure, or we're trying to push lower. But then it turns back around and it starts to take out levels here within this leg here, all right? And the moment it breaks this high right here, this area of resistance, it's broke structure again, okay? So once, you know, it's already broke structure to the downside, okay, all right? And then once it turns back around and breaks structure back to the upside, it's accomplished something. It's made a new high in a broken area of structure. And once price does that, meaning it breaks structure to the downside, okay, turns around, starts breaking structure back up to the upside, breaking through this area of resistance, you just start classifying and marking off your demand areas, okay? Because on the swings to the upside, price is making higher highs and higher lows. And all we're doing now is seeing and waiting to see if it's going to take out this high right here. Once it does that, everything in between are areas of demand. Now, the key to it is really seeing what is classified at this point here, because we're looking at demand, what would be classified as demand, okay? Not supply, because we're not talking about price making lower lows and lower highs. We're talking about price making higher highs and higher lows, moving to the upside now, breaking through this area of resistance or structure right here, okay? So you have a swing here, moving up, price, you see that? Ebbs and flows, price making higher highs and higher lows, moving to the upside, all right? And all these little areas back in the lower portion of these swings are demand areas, okay? Even though they're not big thrusts or big pushes to the upside, each one of them carries some weight. Pushes up here, pulls back, a little bit of, you know, some aggressive buying comes out, aggressive buying comes out. And the way I kind of measure with my eyes pretty much, because it's all about being able to visually see it, is first of all, here's the thing about high probability and low probability. As price, understand this because this is very important. As price pushes up here, pulls back, and breaks higher, what do you see happen? It pulls back right here. So what this area right here is you know, this area right here, once price starts breaking structure here to the upside, these areas become demand areas. But when you see price push up, pull back, break higher, making a high here, comes back, it's tested this area here. And once an area has been tested, it goes from being untested to tested, which from that point, it goes from being high probability, now shifts over to low probability. Okay, so now that this has been tested, okay, as it's moving higher, all right. So, you know, when price gets up here and breaks this area here, I'm already, before price even breaks this area, I'm already seeing as price is making these higher highs and higher lows, starting to take out structure, moving back to the upside here, and ultimately I want to see it take out this area right here, this high right here. So prior to price doing that, each time it makes a swing to the upside, pulls back to the prior swing. To me, it's like, okay, now that's tested. All right, that doesn't mean that price can't still reject that area when, you know, if we break structure and then price pulls back. It just means that, you know, for me, it's like I'm looking for a greater means of looking for a higher probability chance of taking a trade at a certain location, knowing that it's going to kick off, say for instance, more points or move stronger in a certain direction. So with higher probability areas or zones, ones that are untested, you're going to be able to, the chances of it rejecting an area are a whole lot greater than ones that have already been tested, okay? So then price pushes up here. Let's go back to this. Price pushes up here, and the swing here pulls back, breaks higher. Now, it does not come down to this area right here. See, I marked the zone right here, all right? So it's untested. So I continue following price action. Price pushes up, pulls back, okay? It tests this zone here. Pushes up, pulls back. It tested the zone here, then it pushes up, okay, break structure here. So the only untested area that I see so far that price has not actually you know, tested yet is this area here. So which tells me that if price pulls back to this demand zone now that it's broke resistance, now that it's broke structure, an area structure, and has pulled back, okay, to this zone. Once it pulls back to the zone, it's a waiting game at this point. Once price breaks structure here, it's a waiting game for price to pull back to an area of where it's untested, meaning I have greater chance, a greater probability of taking a trade. Where am I going to take the trade back to? We'll get to that in a moment. But once price pulls back here, taps into this demand zone, go ahead and mark your demand zone. Once price breaks structure, go ahead and look back. Look to break structure right here. Look to your left-hand side of your chart. This is the area structure it broke. Once price breaks, it makes a new high. We're talking about demand again now. Just look down. Look to the left-hand side right here. Look for areas or swings where the market was swung pretty good, you know, made a nice swing, and it was untested, okay? I talk about like big swings, small swings, whatever the case is. The bigger the swing that's untested, okay, the higher the probability is going to be. Why? Because more aggressive buying comes out of the area. Take a look from here, for instance, all right? What do you see with that zone I marked? You see lots of buying, you know, green candle, green candle, green candle, green candle, okay? Several green candles, whatever the case is. Someone asked me a question yesterday. Do I identify a higher probability area based upon, you know, how large the swing is, meaning how many bars may come out of that particular area, whatever the case is? Yeah, you could look at it that way, and you definitely, you know, should, because the bigger the actual swing, say for instance, price move to the upside, makes a big swing to the upside with lots of momentum. As you know, as price is pushing higher, and you got a lot of green candles, and then price does not come back to that area, that swing, the bottom of that swing, and that is a key identified demand area, well, guess what? It's a waiting game for price to come back there to it, and when it does, you're definitely probably going to get a greater chance of rejection in that area because of a major push that came out of that area of aggressive buying to the upside. So yes, pay attention to the big moves, the big swings, okay, where price is making those big swings, you know, pushes up, pulls back, and blasts to the upside, or pushes down, pulls back, and blasts to the downside, and then price doesn't pull back to them until some point. So price doesn't immediately pull back to those areas, then guess what? It's a high probability area, all right? So this is untested, all right? So what am I looking for once I get into the trade? I'm looking to take price up to an area of liquidity pretty much, you know? For me, I get into the trade here. Once price breaks above this red candle right here, all right, the body of that red candle here on the 12 range. Again, I'm marking this zone off the 12 range, and I can trade it straight off the 12 range chart once price pulls back to this demand zone. Green candle right here breaks above the body of the red candle. I'm long, taking it to at least my first contract or so to this high right here because I know there's liquidity sitting here. But the ultimate goal is to take it back up to the most recent high that came out of this push to the downside, which is this one right here, okay? So if you get into this trade here, say at 62.5, you take it on up here to, you know, 80, 83, 82.5. That's 20 points almost if you can weather the storm, because, you know, price is going to, you know, as it's moving up, what is it going to do? It does not move. Price doesn't move like in one straight line, meaning it doesn't just move. Now, if there's news or some kind of event going on in the markets, whatever the case is, yeah, price will just blast in one direction, you know, and you may get like tons or several high or big candles, green candles, whatever the case is. But typical pace or price action is going to be push up, a pullback, ebbs and flows, pushing up, pulling back, pushing up, pulling back, all right, before it gets to a certain area. And so sometimes people can't weather that storm because they get a little scared and they jump out of a trade. Nothing wrong with that. Take what you can take, look for the next setup, all right? So let's move on to the next example, okay? That was a high probability area. Again, let's classify that because price broke structure here on the upside. I'm looking down now to see which areas or demand areas have not been tested. This one right here. Untested means price has not come back right to this demand zone. On a pullback, it tested it here. Pullback, it tested it here. Price pushed up, it tested it right here. All those were tested. The only one that was not tested was this one right here. Okay, let's go to the next example. All right. Okay, so I'll move my video down because I want to show you something. All right. Now, I had to bring the chart together. I know people probably saying, can you blow it up? Look, I'm trying to show you guys something because I have to squish it together because, you know, we're going to look at something to the far left-hand side of the chart. Again, we're going to look at something to the far left-hand side of the chart. And when you look following your charts, you got to look at everything, okay? So as prices are making these higher highs and higher lows, all right, I want to show you this. We have a significant swing to the downside right here. A push down, making a low here, a pull back, okay? And then price breaks lower. So there's a big swing to the downside. And the swing where it pushed to the downside was really on September 27th, which was 2 days ago. But we had a big swing to the downside. Now, moving to the right, I want to show you what happened here. I'm trying to keep this into the picture, this high right here, all right, to show you. So as price is making these higher highs and higher lows, okay, what do we see price do right, not right here, sorry guys. Yeah, right, is it right here? Yes, right here. All right, as price is making these higher highs and higher lows, it pushes up here, makes a high here, pulls back, breaks higher right here at 35.25. Look to your left-hand side of your chart. It takes out structure right here, this high right here from to 27. The one I just showed you in this big swing to the downside, it took that top out, okay? So once price does that, takes it out, all right? Let's blow this up now because now we've got our zone, okay? The push up here, pull back, breaking higher, took out that high way over here on the 27th of September, okay, which is just a few days ago. All right. Now, as price is doing so, okay, we have a high here, a low here, and then price makes a higher high here. Now, what do we have in between in that leg to the upside? This is what I call supporting swings, and you have to count these, okay? Because they are still areas of demand, or where demand rests at, okay? Even though they're within this swing to the upside that took out that high over here. Swing here, pull back, breaks higher. But in between this, we have a push up, pull back, and this little leg to the upside, okay? So we have a swing to the upside that takes out that high over there on the chart. Now, the thing about it is that when price pushed up here, pulled back, pushed up, pulled back, pushed up, all right, did it leave any areas which were untested here in these supporting swings? Yes, right here, okay? Because when price pushed up here and pulled back and broke higher, it has not come down and tested this area here yet. It tested this area. Why? Price made a high here, pulled back, made a higher high. When it pulled back, it tested that area, right? Okay, so, and I'm going to show you something because like I said, even, yeah, I'm going to show you this, guys, okay, because this is untested right here, okay? So, makes a high, pulls back, breaks higher, taking that area out, right? And it doesn't come back immediately to this zone here, okay? Let's go ahead and mark that demand zone. We'll mark it right here and carry it out, okay? Price continues making higher highs and higher lows, all right? All right, at some point to the left-hand side of the chart, it must have hit some area of structure, an area of resistance and or supply, and makes a turn, pivots, okay? Now, I have a zone mark, which I'm looking for price to come back to, which is this untested area here. You wait patiently for price to come back to it, okay? So, but look also what happened when price created this demand zone right here, this area, out of the swing to the upside. Look, a high here, a pullback, okay? The supporting swing right here. High here, pulls back, all that thrust to the upside, that momentum push that price made to the upside there. Green candle, green candle, green candle, green candle, okay? As it was pushing higher, taking out that area over to the left-hand side of the chart. On the 27th, the high. Price pulls back eventually. When it comes back down, taps into that area. For me, I'm trading off the 12 range. I could trade off the 4 range too, but you know, at this point here, you know, I'm trading during the session, whatever the case is, because we got such a decent swing here. Okay, move to the upside off the 12 range chart, a decent swing. I can mark my demand area and trade it straight off of off the 12 range chart. Now, if we don't have big swings in the market may be range or whatever the case is, and I'm looking for to trade off supply and demand, of course, I'm going to be pairing my charts together. You know, I'll mark a smaller area of supply or demand off the 12 range. And when you mark a small areas of demand or supply off the 12 range, then I have to pair that with a 4 range chart, because at that point I need to start looking at maybe micro swings or looking for a key identified micro areas off the 4 range chart to be able to take entries on. So basically I'll mark a smaller area of supply demand off the 12 range and then go to my 4 range chart and look for a structure break and a pullback on the 4 range to either go long or short. So I'm trading off the 4 range. But if I got decent swings off the 12 range and I can mark decent areas of supply and demand off the 12 range, then I'll trade right off the 12 range chart. Okay, hopefully that answers some questions to those that say, well, sometimes I see you trade the 12 range and sometimes I see you trade the 12 and the 4 paired together. Yes, when I started showing my videos on the cases, kind of explaining the strategy, I want it to be as simplistic as possible and kind of break things down for the understanding of a beginner trader and see how it can be so impactful and show you how the strategy can actually work in your advantage by pairing the charts together. Because basically by pairing a 12 and a 4 range chart together and looking at paying attention particularly to that strategy, you know, marking the supply and demand on the 12 range and then waiting for a structure break on the 4 range and look for the pullback on the 4 range to take your entry, it gives you better means of confirmation. Okay, so but here in this instance right here, this is an area of demand, price pulling back to it. What am I waiting for here? I'm waiting for a break of the red candle here to the body of the red candle. We get it right here, okay, right here at 23. Where do I take my trade up to? I'm taking my trade to the next area of liquidity resting above, which is this high right here, at least at 35. Okay, if you can take it there without being shaked out of the market. All right, so that's 2 key areas, high probability, 2 key areas which have been untested, will show you that if you look for the higher probability setups, zones of supply and demand or demand, okay, and you wait for the rejection, you get the rejection. Now, sometimes price may push right through that untested area. And that's why you just don't take a trade the moment price gets there. You got to wait for the rejection. Okay, I'm not saying that you can't be very aggressive and jump into it and then wait before you see the actual rejection or get a candle break, whatever the case is. If you do that, you put it on additional level of risk. But it may work out, it may not work out, because sometimes price could be really moving, and it could be something major going on in the markets, and price break right through that area and push right through it. It could have broke right through this area here and pushed down lower, but it held, okay, because it's untested, because it's high volume here, okay, and it's higher probability. Once price breaks the candle, I look to take the trade back up to the next area of liquidity. All right, right here. The aim could be up here. It could, price could continue pushing up here. But the thing also you have to be mindful is that when price is making push to the downside here, all right, after making this high here, what was it doing? It was breaking structure to the downside. So you have to treat these areas right here as areas of supply now. Okay, so basically, if you got into a trade here, you're taking price back up to the area of liquidity, but back up to an area of supply as well. And hopefully that makes sense to you guys. But that's all I have for you guys today. I appreciate everyone who's tuned in and watching the videos. If you're interested, you're a newcomer watching the videos today and want to join the Discord, I'll talk about that as well. But to everyone who is currently joined and subscribed to the channel, thank you for joining and subscribing. Make sure to have make sure to click on the bell as well. You have to make sure if you've already subscribed and you haven't done so, please do so, because I know some of you guys probably aren't getting any videos, but you got to make sure that you have your post notifications turned on. Simply click on the bell next to the subscribe button. If you're a newcomer, new viewer here on the channel, please take the time, if you found value in the content here, to go ahead and click on the red button, the subscribe button. Make sure to click on the bell, turn your post notifications on, so that you never miss one of the uploads here on the channel. Interested in Discord, we have a great channel, a community built for fellow like-minded traders like yourself. If you're a futures trader, come join us. Find the link down in the description portion of the video below. Click on it, invite yourself in. What is it? We are a group of traders to where we come together and talk about the markets. Yes, me, along as well as with over 300 community members on the channel right now, to where we talk about the markets each and every day. All right, I'm an ES trader. I trade the E-mini S&P 500, and there are tons of traders on there that trade the same market as well. But you can trade the Nasdaq, the Dow. It doesn't matter. If you're a futures trader, join us. Okay, it is a community where we talk about, again, certain, give tips and hints and levels, talk about zones and levels. We just share information on the channel, on the Discord channel. As well, if you got a question, someone will have the answer. It may not be me, but that's the purpose of having the forum or the community, is to help one another. Okay, so if you're interested in joining, find the link down in the description portion of the video below. Also, if you're interested in the exclusive videos which are not posted public here on the channel, which are private to the elite channel members, all for the price of a cup of coffee, $6.99 a month, whatever the case is. You can join and become an elite channel member, to where you get the exclusive trade breakdowns, to where I actually walk you through in-depth, detailed process, to where you kind of like, you're not sitting right next to me, but I break it down in depth so you can get a full understanding of my trade entries. So if you're looking to join and want to become part of one of the tier membership programs, simply find the join button on the homepage or on any video on the channel. Click on it and you'll see two tiers there. The elite channel member, like I said, the elite channel members do get the exclusive video content, which is made private, and that is the trade breakdown. So I break things down. It has helped tremendously a lot of traders here on the channel. So outside of that, that's all I have for you guys today. Take care. If you're trading, be safe in the market, and I'll see you guys in the next video.